Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for July 25th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 352. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for first-time guest Dave Lukas of 12-Minute Trading to join us, and Norman Hallett is back. And the option professor is here to moderate again. So I'm going to go ahead and turn it over to him.
Okay, thanks, David. And thanks, everybody, for being here today. We got two great guests. One is new and one we're all familiar with. So let's get introduced to each other. And we'll start out with Norm Hallett. Norm, a little bit about yourself and, of course, the disciplined trader.
Well, it's great to have Dave Lukas here because he's kind of, when they have those Billboard 100 and you got the rocket, the star next to it, that's Dave. He's really glad to have him here. My thing is, they call me the disciplined trader because my focus is on the mental and emotional side of trading. We have a program that's really taking off. It's really in its sixth cycle coming up. We've done this series 6 times, this 28-day trader transformation series called Excel. It's just growing by leaps and bounds. We're excited about that because we have total respect for the fact that you can have the greatest trading plan in the world, but unless you have the mental and emotional capabilities and control to run said plan as written, you won't get very far as a trader. And there's a lot of resistance around it because there's ego involved in trading. As a trader, I can't help but have opinions and thoughts on where the markets are going and I can't help but relate that to our people. So, I'm a trader inside out. I've been doing it for 4 decades. And again, I'm into the mental and emotional part.
Sure. And at the end of the broadcast, of course, you'll let people know how to get a hold of you and get more information. So that's good, too. Dave Lukas, not familiar with your stuff. It'd be very interesting to hear the 12-minute trading. So a little background on yourself and a little bit about what's happening at 12-minute trading.
Sure. Thanks. It's a pleasure to be on with everybody. And Norm, great to be with you too. I am in total agreement. The biggest obstacle to trading success is typically between your ears. So it's nice you're a man after my own heart in that. I've been doing this about 20 years, but the thing is I'm not a trader, I would say. I'm an entrepreneur. I actually have built businesses throughout the world, doing business in almost 70 countries, and have been on the Inc. 5000 list 7 times. And I started trading a number of years ago to be able to create extra income from the cash that my businesses were throwing off. And at the same time, I was actually kind of leveraged, and I was in the process of adopting our daughter from China. And I didn't want to have to finance my daughter. So that gave me the impetus to really get back into trading and to really figure out how to play this game and not have to be right. That's always been my thing. I don't want to have to be right. I don't want to have to call a direction or anything. I want to make money no matter which way the market goes. And I want to do it and create that professional trader-like income without putting in that professional trader-like time. Hence, I really do trade in about 12 minutes a day. And so that's a little bit of the background. That's a little bit what we're all about. Been able to help thousands of students around the world now for almost 20 years, teaching them the different way of trading that I do, which is I sell options. I do not buy anything. So we can talk more about that as we go today.
Absolutely. Okay, well, we start out every Monday with the couple of questions, and the first one is where do we think the market might be going between now and Friday? We use a reference point of the opening, which I'm going to use on SPX at today at 39.65. So using 39.65 as a starting point between now and Friday. Norm, how do you see this market unfolding? Norman.
Hey, Norman, you're muted.
And I just said something very important, okay, but I'll repeat myself. I am sorry about that. Looking at this chart, it looks like it's trying to go higher, but look, you see the more recent top there that it may have a little difficulty at that 4,100 level. But this looks like a sideways market. It's looked like that for several weeks now, as you see. last week when I was on the show, we talked. I think all the guests talked about a lower market by the end of the week, and we were all, I believe, incorrect, but not that incorrect because there wasn't much in the way of movement last week. You know, it's funny because there was a tremendous movement last week, but it doesn't seem so tremendous in the face of all the volatility that we've been getting. It's it's the new normal in reality. So even 50 and 100-point moves in the S&P index don't scare you anymore. Don't really have much meaning as far as turn of direction. You really have to do your technical homework. But you can see here how how we're challenging the we look like we're going to the upside from the standpoint of being over those two averages. We have the cross, but doesn't seem to be a lot of power in there. I'd be a cautious long or short from here to the end of the week, but my feeling is that we will be slightly lower by the end of the week, somewhere in that $3,800 level. 3,800 level. That's and it really is a guess because sideways is just what it sounds like, somewhere between the top and the bottom that has been. So I'll be looking for a new higher low, perhaps, and therefore 3,800 would be my eventual guess, but I wouldn't invest in that respect.
Yeah, I got you. And so you're basically like 50-50 on it, or maybe 55-45 leaning to the downside.
Yeah, I am. I would give it a 55 or 60% chance, but again, that's not enough to really do anything in the market.
No, it's not a huge conviction.
Right.
Okay, Dave, 12 minutes or less. Where are we going to be on Friday?
Of all the weeks to ask that question, this is the week, right? You've got the Fed in the
Yeah,
middle,
exactly.
you've got GDP coming out. You've got
Right.
every big name reporting earnings.
Right.
And so this is one of the most volatile weeks of the year. In fact, I told my students in my services this week, I'm risk off till Thursday, because the real move usually comes the day after the Fed, not even the move that happens after the Fed. And
Right.
I did say, though, that this market has wanted to go higher, and it wanted to go higher. It filled that gap that you see on the screen back there, about around the 13th there. See that gap that was there? That was needed to be filled. We got that on Friday and then pulled back from it. And so we've got that now in play, but you got to think of it this way. I look at things macro, I look at things micro, I look at different timeframes of charts, and the short-term timeframes are all getting charged up again, ready to go. Essentially, they're at a point where they can trend again. But think about it this way: earnings and guidance expectations have been set pretty low, right? There's been a lot more earnings surprises to the upside than to the downside in the cycle so far.
Mm-hmm.
Fed doing 75 basis points rate hike is already priced in. It's starting to signal that it may slow the pace of rate hikes after this meeting. And we don't have another rate meeting until September. So there's clear sailing for the markets in that regard. GDP is most likely going to be negative, right? It's going to show the U.S. is in a technical recession, although we see that they're starting to change the goalposts for what that really means. But that gives further reason for the Fed to slow, and markets, I think, will like that. The other thing is Apple got ahead of things. Remember, Apple's the bellwether for the market. It's the most widely held stock. And it got ahead of things last week, talking about how they're going to slow some hiring and some spending and stuff. So that's now priced in. So I think barring any major unexpected events, any major unexpected things that come out, such as Fed getting even more hawkish, doing 100 basis point rate hike, and then deciding they're going to double down in September and signal that type of stuff, I think most everything's priced in. So I give a slight edge to the market going higher by the end of the week,
Mm-hmm.
because we are coming off such negativity and everything. And it's a typical bear market rally. I think it's one of those times where we could see it run through into August, get everybody on board, and then you get into the September, October months, which are typically volatile, and then fade up from there, maybe back to new lows. I'm watching for that lower high like Norm is too. I'm looking for the market to, we've seen this before, right? We do these massive runs in the span of a week or two straight up, then roll right back over, right? And whatever catalyst causes it, the market wants to go lower, then puts in a new low. So can we hold? Can we put in a higher low here? Use that as a jumping off point to find some support and head higher. So slight edge upward for the week, but anything can happen this week with all the risk events that are out there.
Yeah, I wanted to ask you a couple of questions. One is with the earnings coming out, Apple is a very big multinational. I think 58% of their revenue comes from overseas, and they just announced they're cutting the price of iPhones over in China. So you think that strong dollar and also like ad sales with Snap really fell out of bed? Could bad ad sales hurt Meta and Google, and maybe the dollar hurt Apple, and we could get a surprise, and that could be a very big factor?
We could, but the dollar weakness has come on more as of late than it has earlier.
No, I say the dollar's very, very strong, and it's probably
Yeah.
hurting the multinational. So I'm saying the
Yeah,
surprise would be
that's what I'm saying. The dollar's increase,
Yeah.
or appreciation, if you will, against the other basket of currencies is really had a run towards the back half of this quarter. So we may see some of that. I think we already saw some of that already hit when Snap announced. You saw Meta get crushed and you saw Google get beat up on again, that's people getting ahead of what could be those things. And so there you have an opportunity where, let's say that ad revenues aren't as bad. Google does okay. Meta does okay. Remember, no debt for Facebook or Meta, a lot of free cash flow. Same with Google.
Oh, no, they're good companies, no doubt about
Yeah.
it, but they may have had a bad quarter.
So I don't know yet. It's
Yeah.
too, I think if there's risk for a bad quarter, it's going to be the next quarter.
I
think
gotcha.
it'll continue to slow, and that's going to, it's always lagging, right?
Yeah.
So I think this quarter may be okay, but I think certainly through the rest of the year, you're going to start to see earnings go lower and the expectations for earnings get priced in. That's why so many earnings are beating right now. I think expectations were set really low, but they're just through the half of the year for sure.
Yeah, I mean, people were thinking a full-blown recession is coming like next Friday or something.
Yeah.
I get one last question on the VIX. I noticed this. I wonder if you noticed this. The VIX hit a low of 2250 on Friday, and it had a higher low on Thursday. And if it has a higher low today, it would have a chart formation of a low surrounded by higher lows, which might indicate that 2250 on Friday was the low the VIX is going to hit. And if that's the low the VIX is going to hit, could that be something to keep an eye on? Because if you started seeing 24 or 25 on the VIX, maybe there'd be an indication of a correction as well, huh?
It's certainly possible. The VIX has been really interesting through this. I mean, we just had the worst first half of a year since 1962.
Mm-hmm.
And we've got VIX levels getting not even above 40.
Mm-hmm.
When you put that in perspective, other bear markets in the past, you got VIX up in the 60s and 70s. So, it's a really weird market where it seems to be a very, methodical sell-off, if you will, So I don't know if the VIX is quite the signal that it used to be in this market that it has been in the past, but certainly like any chart you're looking at on the screen, right? It swings up, it swings down. And so does the market the same way. So the VIX being at a low point right now, the next logical thing you could think of is that, hey, where's it go from here? It turns around and goes back the other way some. But if it goes up to 25, 26, does that really mean the market's going to tank? I don't know.
No, not tank, but maybe that 3,800 number Norm's talking about, something like that.
It could be. And again, that could easily, come from any type of risk event that's not priced in, right?
Right.
It has punished even earnings that are slightly off are getting severely punished in guidance, right?
Yeah.
Like it has in the past. And so again, any slight thing that just the market doesn't like with an Apple or something, could absolutely do that.
Or like if somebody says, or here's our quarter and we're looking for, we have no guidance or we think it's going to slow down. Because I mean,
we're going to suspend guidance.
Yeah, I mean, 16 to 9 and change in a couple of days on Snap is, and certainly Snap is not like any of these other companies, but it does have ad revenue. But we'll have to see. It's going to be interesting, no doubt about it. And
I'm sorry. Go ahead.
No.
I had a thought. I just had a thought that the lack of volatility, when Dave mentions the fact that, even with some drama, the VIX hasn't seen the kinds of highs it's had in the previous crazy times. But, I think it's, again, this acceptance of a higher level of volatility. I mean, for that VIX, to even see the highs that I'm looking at the chart is going to take, some real surprise action. I'm wondering whether, although the VIX will always be an indicator of the kind of volatility we're looking for, I think it's less than it used to be to some degree because of these new expectations of the market.
And there's a lot of other factors affecting the market too. I mean,
no question.
we've got a Fed that's monkeying around all the time, and we've got other central banks that are doing what they do. So I mean, it just 20 years ago, it had a much bigger impact and was a much better signal because you had a much truer market. Now this market has a lot of things that back of a better word, do monkey with it and get in with it, right? We've last 10 years embarked on QE to infinity and all the other stuff that's never been done prior to that. So you're just in a different world than the past in that sense. And so traditional indicators and things aren't necessarily the same anymore, don't function the same because it's not they're not as free of a market in that sense as it used to be.
It seems like there's some complacency there, though, because, it seems like nobody's hedging against the downside. That's why the VIX is so low. And then also the ARK funds are actually getting a lot of money coming into them. And so there was a guy out there who did say it's highly unlikely we're hitting a market low when the ARK fund has a positive cash flow and the VIX is at 20,
I got a sideways question for you, Dave. I know that you primarily sell options.
I know this market's been wonderful.
Well, it's been wonderful. Is it getting less wonderful with a little bit less volatility?
No. So one of the things that, the best way I can explain what I do is it's like Moneyball for trading. So I stack all the deck in my favor. Now, I'm not a home run guy. I want to create consistent cash flow, daily, weekly, monthly from the market. That's what I do, right? Traditionally, I'm selling out 3 to 6 months. One of my strategies, I sell 3 to 6 months out, and I'm selling puts, or I'm selling put spreads at the lows of a stock or a market. So you talk about where the VIX is right now. Like if I was looking at that as a chart, that'd be a great time for me to look at, okay, can I go? Now you can't really sell on the VIX, but as an example, that's where I go, can I sell 30, 40% below this and pick up my desired level of return and then just let time work for me or let it run away from me the other way, right? And then profits. And I'm typically in those trades, 1.5, maybe 2 months, those type. But then I do scaled down or shorter term versions of those on a weekly basis, even a daily basis, a monthly basis, to where this market has been great. And the way I've been doing is doing iron condors, just bracketing this sideways market. I said to all those that follow me that are students and everything at the beginning of the year that I thought we were headed for a down sideways market. And we'd be in if you look at like a monthly chart, that's just a big, wide sideways market for a while, right? And we've kind of got that. And so bracketing that, looking at those lows, I'm a big fan of the Bollinger Bands. I like the way the markets perform to them. For example, the VIX is at the lower Bollinger Band. So chances are it's probably going to head back the other way. That's the ebb and flow of it. And so when I place things on time frames outside of those and premium, get my desired return, it's awesome. And in this market's volatility for an iron condor type setup, I do a trade called the Target 100, where my goal is to make 2% a week on risk. And so every Monday I set up that trade, right? And I'm making 2%. So again, not a home run, base hits, but these things add up. The reason it's called Target 100 is if you make 2% for 50 weeks out of a year, you're targeting 100% return on your money, right? And so it's so great because I can throw this thing on, I'm way out of the money. And we've done a lot of analysis to find the largest moves that happen in any given stock. We actually have this live to the markets. We have a data management solution that we've created that tells us, hey, largest move in this stock upward for a 5-day period is X. Largest move downward for a 5-day period is X, or the SPX or the NDX or the RUT or whatever. And I set my levels outside of that, get my 2%. And then within a day or two, I'm usually out because you'll have maybe a 50-point up day on the SPX and the bottom side, I clear out. Then it drops the next day and then the top side I clear out. So the volatility, even as low as it is, the swings that we've had still are really beneficial for that. And just shifting to this way of trading has really been awesome. We haven't had one losing trade yet this year with that strategy, the Target 100. So it's been a great market for that. So we'll see if we get back to a real trending market like what we were seeing at the end of last year into the beginning of the year before things fell off. If can continue. But right now, that strategy is working really well. And I think all of you guys would agree that, different strategies work well in different markets. And so you have to be you can't be rigid in the sense that, hey, I've got something I've been doing forever and it works. You have to adjust it and use a lot of the same principles, but put it to work in a different way. And that's what I do. I'm not selling so much 3 to 6 months out anymore. I'm selling a month out. I'm selling a week out, and using iron condors to boost my premiums because I can get money on both sides instead of just one side. And then it allows me to sell further out of the money. Does that make sense?
Yeah. In other words, you're in a hedge position. So you're figuring you can do both sides because you're probably only going to get whacked on one at the worst case scenario.
Yeah, and I'm setting at my levels to where, like, for example, the SPX in any given 5-day period of the last 5 years of data, maximum 289 points. If you place your trade 210 points, outside 210 points to the upside, 98% chance of winning that trade.
Yeah, I know the problem.
Myself in those positions, right?
Yeah.
Those, so and that's how I'm managing it, and just collecting that premium like that.
What's the underlying markets that you generally use? Because when you're doing spreads, obviously you have to have tight bid offers,
Yeah, I love the European style options because you don't have that assignment risk. So SPX, the RUT, the NDX, but I also use the SPY, the IWM, the QQQs. QQQM is new on the NDX.
Right.
It's a cheaper version like the SPY is to the SPX.
Right.
So those are all ones that I like to use, especially for like the Target 100 or the double, which is the monthly strategy that we do. I like the indexes right now. I don't like individual stocks for the reasons we just talked about.
Right.
Because one little piece of negativity, look at Roku.
Yeah.
I mean, look at any of these guys. Look at Snap. One little piece, just tank it, right?
Yeah.
So it's easier to play the indexes in this type of environment.
As far as exit strategies, do you take it up to the strike? Do you wait until the premium you received goes a certain amount, or do you let it go further in the money because you have a hedge on, or how do you play the exit strategy?
No, it's all defined by the target, right? So if I want 2%, what I'm doing is, let's say I'm selling a 10 wide spread because I do small account and large account trades,
Right.
Different sizes. So if I'm doing a 10 wide spread, think about it. Now, this isn't going to sound sexy, but 2% on 10 wide spread, that's $20, right?
Right.
I'm actually selling and getting 35, 40 cents. And then I'm immediately turning around and putting exit orders for 5 to 10 cents on both sides, and then just letting them go.
Okay.
And with a day or two, they're typically exiting out. And I'm doing that over and over again. Now I do a lot of contracts and stuff, obviously, but I'm doing that over and over and over again. In fact, we just launched in July. I think some of you know Doc Severson. Doc's been
Sure.
for a long time. I know he's been on this before.
Yeah.
Doc and I were meeting through the spring and really talking the strategy, and he's actually come on board and he's running a daily version of this where he's doing one of these trades every day under 12-minute trading for the daily Target 100 service. We launched that in July, just the beginning of the month. And so he's really loving it because he's collecting premium that way, and the students are too. But again, it's those base hits that add up over and over again to that home run revenue, but it's winning. It's that consistent winning. And again, to date, things can change. They haven't lost a trade on that yet, which has been really fun this year.
Yeah. No, the market's been fairly contained. So the writing of the option strategy, it's been more suitable, whether that changes or not.
But a lot
we'll
of
see.
people don't realize when you sell options, and Norm, talk to the mental side of this, because I think it's really important. Because I think most people, and I was like this, when you first learn to trade or you first get into trading, you buy, right? You buy stock or you buy an option if you learn about options, and you hope that it goes in the direction that you want it to go. Most people starting out are like that. They don't necessarily have an edge. They haven't figured out how to really read price and read charts and really understand how to do a direction. And even if people are good at that, it's still really hard. I mean, I think we've all seen, or we've all made the joke that whatever Kramer says to do the opposite, right? And that's because it's so hard to pick a direction and be right. And that's what everybody's trying to do. They're out there trying to be right. You think about a stock, it can go one of 3 ways. If I buy a stock and I'm hoping to make money, I want it to go up, right? But it can go down, it can stay the same. So just flat out percentage just by buying a stock with no edge, not knowing what I'm doing really, I got a 33% chance of making money. Now to put that in perspective, the odds at a blackjack table in Vegas are 46.36%. I'm literally better off going to a blackjack table. And that was the big realization I had years ago was like, well, if buying an option or buying a stock gives me a 33% chance of winning, who's got the other side of that has the 67% chance? Because that's who I want to be.
The seller. Yeah.
It's the seller. It's who's
Yeah.
selling it. And so
You know,
how do you sell, right? That was the next question. And that's what took me down the road to figure out what type of trades as back then, not an accredited investor, right? I couldn't do IPOs. I wasn't bringing a company to market anytime soon. How could I become a seller, right? And so this is where thinking non-traditionally or thinking, contrarian can make a real difference. And so now just by choosing to sell an option, I've got a 67% chance of winning. And I've been able to boost the odds through how I set my trades and in the way that I enter and the things that I do to over 90%. I've tracked my trades going back to 2013 and published them. And so we've had a 90+% win rate. And so it's just a different way of looking at it and doing it, but it's not going for that home run. It's that consistent income.
Well,
and that's a different mental game, right, Norm, than the.
Yeah, and I think also, I mean, what you're saying is 100%, 1,000% true. I mean, when you sell something, I mean, then you can take advantage of the market doesn't advance. You're going to win, and as a sell, you'll get to keep the premium. And if the market
get paid,
goes sideways,
right? If you're going to take a risk, you should get paid.
Yeah, market goes sideways. I ran back in the 80s before there were exchange traded options. I ran one of the largest option firms. All we were able to do, we had private dealer options with Makata Metals, and all we were able to do was buy puts and buy calls. And we used to, as a sales explanation, we used to emphasize to people that go ahead and buy this call or go ahead and buy this put because all you can lose is every penny that you put in, but no more. Mm-hmm. And although that may sound like a crazy statement to say to try to calm individuals, the idea that you can speculate and have the possibility of making all this money, the fact is you can only only lose what you put in, but no more. There's a safety feeling in that. It's a give it a shot feeling. And that's where a lot of people come into the market and don't do very well because that's their attitude coming in. And so being able to say all you can lose is every penny that you put in, but no more. There's a safety factor. There's also this idea that when you short something, I mean, when you buy something, it can only go to zero. When you short something, it could go to the moon. So the risk is untethered when you short things, and therefore there's a fear of shorting things because you don't want to, you want to stay in control. You want to have some idea of how low it can go. So, those factors always played into people who are buying and selling options. So it's really important, I think, to align yourself as somebody who appreciates the beauty of options and the combination, like you said, cornering, bordering the market. It's almost like putting in the gutters of the bowling alley, the things so that you don't hit the alley. If you're willing to accept a lesser result, you can do that a lot more consistently by using options in combination. And you've just mentioned a number of ways, but yeah, the psychology is based on the fact of what I've just explained,
Well, and here's the thing, anybody can get into a trade, right? Anybody, any Joe can get into a trade. That's the easy part. It's getting out of the trade with a profit. That's always the hard part, right? And so, defense is a part of it. Risk management is a part of it. I always look at myself like a sniper in a tree. Like I've got the exact setups that I'm looking for. If they're there, awesome. If they're not, I don't trade. Mm-hmm. Force it, right? I let it come to me. And sometimes it means I don't trade, and that's okay. And I think that's really important, is managing it and taking control over it instead of being controlled by it. And that's a big thing for traders that they have to go through as the rite of passage, right? Or a lot of times they don't make it. And that's the one, as you mentioned, kind of that one addiction when you're buying. It's easy to buy, it's easy to get in. It's easy to do, it's a small amount of money, but it's like for a lot of people, it's like death by 1,000 cuts. They just lose. They get one win, they get excited, they put more back in, they lose the next one and everything. And so, without a really significant edge, without a really, really solid way to call direction a significant portion of the time, it's just a hard game, And so I like where I can say, hey, the SPX is at 39.64. I'm going to go out and sell a 10 wide put spread, at 3,300 3 months from now. And I'm going to get paid 10% for that and make $1.50 on that, 10 to 15%. And if it goes up, awesome. If it stays where it's at, awesome. If it drops 200 points, I don't care. You know what I mean? For me, that just makes it a lot easier mentally, makes you sleep a lot easier at night. And, helps with clarity too, and being able to manage things and stay out of the fray of all that daily movement. I think you mentioned it before. It's a few years ago, a 100 point move in the SPX was considered wild and crazy. Now it's the everyday thing.
Right.
How do you go about picking a trade? Is it how many, where the S&P is something, or where the index is, or is it how many days to expiration, or is the premium have to be at a certain level on a nickels, on a 5-point spread or a 10-point spread or whatever?
Sure.
Point? Yeah.
So what I do every week, as part of my service, I do a full newsletter video analysis of the markets every share every trade, do all that, and go through all my existing trades, updates, and all that, and as well as educate on different topics. And so I do, like, for example, I was mentioning the target 100 trade, the 5-day trade. I'm going to go through every one of those indexes that I mentioned. I'm going to look at the data that I talked about, right? And I'm going to see out of all of those, which one gives me the biggest edge? Which one can I sell the furthest outside the data on both sides and get the required premium that I want? Which one it gives me the ability to sell furthest, like outside those Bollinger Bands on both sides, and give me even room, right? And I'll look at it from a 10-day and a 30-day, type window from a chart standpoint,
right?
Even a 5-day, right, to see kind of where I'm at. But I'll even go up and I'll look at and say, hey, can I sell outside the 1-year daily chart Bollinger Band levels? That's even better. And so I go through this analysis to find the best of the best ones, and then those are the ones that I go with.
Yeah. Well, that's good. That's you find parameters, and then you set your strike prices outside the parameters. That makes sense. Yeah. Norm, any markets that you're kind of focused on here that we're not talking about? I mean, we got the S&P, but any of your students focused on currencies or metals or energy?
Well,
or
I think one of the what's getting a lot of noise recently is copper. Can you throw copper up there? You can see
that's one of the ETFs.
Oh, that's the copper miners.
What's the? So you want to do the futures?
Oh no, it's HG, isn't it? High grade, yeah, HG.
HG.
There it is, futures right there.
Pretty similar. But you can see, this copper has always been an indicator. You can see the kind of movement that copper can give you from a standpoint of when you get it right. There are some nice little runs in there. Now that we're below that, is that the 34? What is the moving average? The blue one?
It's 34.
Yeah, 34.
I think I don't think that's the right chart. It's HGU is the September contract. HGU, because the price, I thought it was at 6. I know the thing's down at 3. Went from 5 to 3. There you go.
There you go. Yeah, and
that's the ugly movie I was looking for. Yeah.
Yes, from the the fundamental standpoint, copper's always been an indicator for builders and just a growing economy. You're going to use more and more copper. So this is a lot of fundamentalists are turning to this chart and saying, hey, chartists, don't you see what's going on? Don't you see the copper is telling us that there's going to be a recession if there isn't one already? And you can see, these kinds of moves, once you start separating yourself from that 34, you're liable to see, the further you get, the more likely you'll have a snapback to that 34, supplying you with the correction. What happens from there, it's going to be very critical as far as a lot of copper players are concerned. But there's a lot of stuff in the news out there. Not only the war, which gave it that initial lift in the middle of the screen there, but without, as we forget that the war is going to happen and other things are are slowing the economy and so on, it started to fall apart. And you can see how if you move to about the end of April, middle of April, you can see that depression and that low right there. Keep going. The low from that run, yeah. And you can see how it at that low, move that cursor just a little bit to the right, more to the absolute low of that run, of that daily run there. Now keep going, keep going. Okay, go right there. Now, as you see there, you see how far you're coming from the 34. You know, that portended as the snapback that I'm talking about. Now we've continued lower. We'll have that snapback at some point, and maybe beginning now. But this is a market to watch for confirmation that that it's truly, you know, this in lumber. Lumber's a little wilder and less volumed, but copper is a really good market to decide where you decide on an undertow. I don't know, Dave, if you consider things around markets before you that, you know, when I look at markets like copper and I see the there it's pointing lower, it may give me a little bit of more courage to take a higher number of short positions. In other words, I'll favor the short side, not to the absence of taking long positions, but in my position sizing, because I've always trained traders to understand that position sizing is probably, you know, it's the secret to loss control. And you know, if you can identify the undertow in a market, with things like copper and whatever, then you can adjust your position sizing to related markets. And so, you know, I always like to look at copper when people talk about recession.
Well, commodities in general right now are signaling, so are the bond market, right? I think the bond market's a lot smarter than the stock market, and the bond market's signaling it too. I mean, you got coppers up, pull up SLV, look at silver. You know, and look at that drop in silver. It, you know, had that support around 19 and then just fell off the cliff. And I can tell you right now, if you look at like a 5-year monthly chart, it's down below the lower Bollinger Band as it is. Right. And it's still got some room to go down. I could see, you know, silver coming down to 15. Yeah. And steel.
Hey, Norm, I wanted to add one thing to your copper call. You know, infrastructure is going to be a big thing both in China and probably here in the US. And copper is going to be obviously a big player there. So it could be a much longer term play. And there's a stock called Cleveland Cliffs that I, full disclosure, just bought recently that's already on its way back up. And that has a heck of a lot of potential. That's an industrial metal. So copper would be part of that ball game. And you can see there that there could be a very big opportunity, which was what instigated my purchase. And so I'm 100% on Norm's team here that the industrial metals are cheap, and it's time to throw your wallet in the ring.
Cliffs is a good company. I sold puts against it for many years. I wish I sold more back when it was at like $3 or $4. Just ago, you know, but it's, you know, it's been around a long time. Allegheny is another one too, ATI.
If you're a believer in the, and I'm seeing things out of China, we're going to put money into infrastructure. And, you know, even Joe Manchin would probably agree to infrastructure here in the US, you know what I mean? So because it's jobs and it's something tangible that comes out of it. You'll get a road, you get a bridge, you something tangible. It's not like money going overseas to who knows who, you know what I mean? So I think it's going to be very interesting. And Norm, I think you really hit one with the copper, because I think it's right in the main theme. Anything else going on, Norm?
I'm sitting here thinking Dave hit on something with the silver. I mean, I've always been, that's what got me started in all this. I started trading in October of 1979 when the Hunt brothers were cornering silver. And but silver has become more and more of an industrial metal rather than a precious metal. It's always been both. Yeah, but you know, and now gold has not held up very well either, but a little bit better than the silver because of its industrial capabilities or incapabilities. But you know, on the other hand, and I think probably Dave would agree that you know, when silver gets down here in this you know, below 20, and of course as it approaches 15 and even 12. these are possibly some good long-term entry points, because silver, it is a precious metal, and it probably won't stay down here forever. So
if production does come back up, I think we're going to go through a recession. The status quo hasn't changed, right? We're still in the same place that we've been. Oil is the policies toward it and everything that are out there, at least domestically, are not that favorable. There's a supply issue worldwide. We've got the war, so we've got to get to a status quo point to where things really turn. And oil is the lifeblood of everything. I mean, you name it, and it's made of oil. The computer you're using is made from oil. So there's a time where we're going to get back to where oil probably does come down in price, and that will help spur growth. And silver is something that will be needed in a lot of electronics and stuff as that takes off again. So yeah, if you're looking for something that is looking a little longer term, it's a great time for precious metals. I like to buy the actual metals like silver, like gold, and have them as a hedge, as everybody does. But there are great times to get some of those. And I think, like you said, if it gets down to 15 and 12, it's a really good time to pick up some silver and maybe ride that wave. Because the other thing that hasn't happened yet is that the traditional ratio between silver and gold is still way off. Silver could be worth a lot more in relationship to where even the gold price is now. And at some point, I think that'll correct too.
Mm-hmm.
Any other markets you got there, Norm?
What is the ratio you're using, Dave? The old 50 to 1 ratio?
That's kind of the standard. Yeah.
Yeah.
It's at 100, right?
It's like it's like a 90 to 1 or something like that right now.
Yeah, I think the other market, of course, and Dave mentioned it, is the bond market, because that's been pretty easy to trade, really. In general, I mean, in a very macro view of the bonds, of course, when interest rates start going up, they tend to continue going up until such time as they start going down. And then it continues. You may get one little flip right at the turn, but generally you're pretty safe waiting for some corrective action in a downtrend right now in bonds, and looking for places to short. So do we have the bond chart up there? I see oil.
Which
I'm looking at the 30-year bond. Yeah, the 30-year bond.
Yeah, TLT.
I
think you got it up there. Yeah. TLT will give you at least a chart of the thing, and then if you're doing the future, you're doing it's the same thing. Only
this is fairly close. I mean, but you can see, it could be bottoming action here, as I think at least 3/4 seem to be in the market as far as the next rise is concerned. But I mean, look at the consistent. Look at how it's hugging. Is that the 8 there? Yeah. Look at how it's hugging the 8 bar exponential moving average. That's the one that I tend to use to give me. I mean, sometimes it'll straddle it, but it's very consistently lower since since the turn back in October. I would be looking. This is a great time to draw some Fibonacci lines with that whole all the way from December, looks like November, December, down to and try to give yourself some idea of where a rally, if it does rally from here, will give you a chance to turn. Looking there at the 38, of course, and the 62, which are the basic ones. I don't know who came up with 50. I don't think Fibonacci did. I
know. Yeah, and Michael said that the other day. How about if you put the 5-year graph, and you'll see those moving averages are way above the market. That might give you a target price too.
Yeah. So
there you go. There's some targets.
Yeah. Again, we're going to have some trading opportunities here. In the market that's very consistent. And there it is. Deviating from the 34. And, generally a market will check that before it goes higher. I mean, look what it did right at the, I guess is that July 2020, right at the turn of the year. You can see how close it got to the 34 and then took off. It tends to do that, and I would expect that will be the case in the future for what I'm looking at here at the 20. Your thoughts, Dave?
Come
If
on.
any?
No, I think you're reading it pretty well. I mean, like I said, I think the bond market's a little smarter than the stock market right now. So, I think you're at a point where it looks like it's trying to find support in that range right above the 8, right? And it looks holding it. So we just have to see, it's, again, this week's going to have a big impact on that. So it's kind of a crapshoot right now. I think after Wednesday, we'll have a lot better idea on a direction for this thing.
Yeah.
I'm really remembering that VIX, Dave, that low on Friday surrounded by higher lows. That
Yep.
sometimes is very much a turn. And we're going into Tuesday and Thursday, which you've already referred to as very important days. And also the news that you're talking about, it could break, the news doesn't have to break well. So if the VIX really started to go and we had that turn on the Friday with the, the low with the 2 higher lows, it could be very interesting how the week closes out. If this thing started to gain some momentum on the downside, it'd be interesting to see if these people who are, coming in now, or the people who covered their shorts might go back into the shorts. It'll be interesting to see.
Right. Yeah.
And you like to talk about parameters, Dave. So I was going to bring it up. 39.90 and 39.40. Wouldn't you say those are the parameters right now on the S&P? 39.90, 39.40.
Well,
and whichever way it breaks, go with it.
Yeah, we just saw it with the, that gap getting filled. That's really what I was watching, is that gap to get filled, and it got right at it. And so now it's kind of hanging in there, but it's on the daily chart. It's out. It just came off the upper Bollinger Band. That's what we pulled back to, this 39.60. So I think it's a little higher. I think a little over 4,000 is probably, that's about where that gap was. So if we through that, obviously running through there. And then on the bottom side, 37.43 is the lower Bollinger Band on this thing. So if you see it break through that, I think you're off to the races to the downside. So 3,800 would be a good signal of that if it comes back down to there. And even on the middle time frames, 4,100 is the simple moving average in the middle of the Bollinger Bands on a weekly chart. So if we did continue higher, I'd say that'd probably be about your spot to look for things to finish out or get tired around. Don't make a mistake, people. Like I said, the status quo hasn't changed, right? The same factors that have got to this point are still what they are. And so this is probably just a bear rally, and we have to be prepared for it to roll back over to new lows. And so, don't just think, just because we have a nice rally and we hit some of these levels that everything is sunshine and lollipops again, and we're back to trending and all that stuff. I think, the bear markets will humble you, and this is the way.
You're making a great point, Dave, because the inflation's at 9%. That's all we know. Is it going to be different?
Yeah.
Yes, but it is at 9. That's what we know. And what we do know is Powell says he's going to get it down to 2. Those are two things like you're talking about that are not going away. And this talk about a pivot when they've only done like a couple of hikes is kind of like.
And even look at with their balance sheet, they were gonna.
Yeah, exactly. They got 9 trillion. They got 4 trillion to come out of that thing.
Yeah, they hardly got rid of any of it.
Right.
It's really hard. The quote unquote soft landing is I think if they want to bring this in line, you're not going to get a soft landing. And they more and more are starting to walk away from the soft landing talk, they're changing the definition of what a recession is now. 2 quarters negative, is not technically a recession. We're hearing that now. And so the goalposts are getting moved. So, I just think that, we're in the 4th inning of this.
Yeah. You talk parameters as well. The first 6 months of the year, the parameters seem to be 4,800, 4,200. And now we seem to be in a new parameter of 3,600 and 4,200.
Exactly.
And if you can operate your trading strategies around those parameters, you could probably make some decent money.
Well, even better. How about you can operate way outside those levels and still hit your targets?
Yeah.
You know,
But yeah, because the evidence is right in front of us, right? Yeah. Yeah. Well, we're coming to the top of the hour here. Norm, is anything else you want to touch on and review as far as the disciplined trader is concerned? Because again, helping your emotions keep in control and sticking with like even Dave was talking about, he has a disciplined approach. So, there's a lot of things you can help with people. Do you want to explain that a little bit more?
Well, yeah, I want to do that, but first I want to talk about my growing love for water. For those looking for that long term, I don't know if you could put up Aqua, AQUA. But we're coming to a point where we may be in some sort of bottoming action here. You can see how we're challenging the 34 and so on. But I'm really not watching much in the form of action here. Otherwise, to say that I'm looking for places to accumulate of Aqua, which is I believe water is going to be. You can see it with the fires in the dry western part of the United States, as well as parts of Europe and so on. I mean, the environment is changing. Water is going to be a big thing. This is a utility that's a little bit different because it, as they say that. During the gold rush, it was the companies that sold the shovels and the pitchforks that made all the money, not so much the people digging for gold, which was a hit or miss thing. This is a company that supplies filters and cleansing apparatus, replacement parts for water utilities, etc. So and desalinization plants. So this is a company that's really well positioned for the whole water. I just want to bring that up. But as far as what we're doing, we're getting so much positive results from traders, moving from out of control to in control with our Excel program. It's a program we started at the beginning of the year. We're going to start at the 6th cycle. It's a 28-day trader transformation. And what we use are some scientifically proven approaches, including a particular type of meditation that we have our traders do before they start, 7, 8, 9 minutes long before they start trading to get focused on a particular issue, whether it be pulling the trigger without hesitation, having patience to wait for setups, this kind of thing. We drill on each of these for that 4-week period. We meet really 5 Mondays in a row, and between those Mondays, we have you utilizing our proven assets, of which is something called EFT, emotional freedom technique, as well as the meditation. So if somebody is willing to do 15 minutes of relaxing work a day, you can do very, very well. Go to the disciplinedtrader.com/Excel. That would be where you would find this. And I want to give you a coupon code for give you 20% off early AUG, early like in early bird, and AUG, AUG. This next cycle starts, you scroll down a little bit, you'll see that it starts Monday, a little bit too far. Monday, you'll see all the days there. Keep coming up. Right there, a little bit too far. Keep coming down. Here are the details. That's what I want to see. You can see the 5 Mondays in a row where we talk about hesitation, fear of losing, lack of patience. This week, we're actually doing lack of patience in our current series. Well, the next series starts when we'll have graduates of the current series. Then we start a new one for you, starting right from the top on August 15th. So those that want to join under the safety umbrella of a guarantee, use the code early AUG, and you'll get a couple of $100 off on this. So it'll be a $797 investment. But believe it is the best investment you can make. Stop looking at different trading plans and different systems. Start looking at yourself. I think that's where we're going to find the answers.
Excellent. Excellent. Dave, can a quick review on what's going on with the 12-minute trading?
Yeah, so like I said, we have multiple different strategies that we do. In fact, my service is the flagship service. I do 5 different strategies every week. Packaged in a newsletter, goes out, full market analysis, video analysis. Every trade I do, I publish so that everybody can see it. And then I do trainings throughout the week, as well as alert updates anytime I make a change and that sort of thing. And then we've got doc service for the Target 100 daily income. If you go to 12minutetrading.com/CFN, you'll actually be able to get a 2-week free trial of it if you'd like. You get some of the ebooks that I've written, the 5 key elements of a winning trading strategy, which some of that talks about the mindset stuff that Norm does. But man, your stuff sounds like it's right on point. I'm going to have to check that out and maybe share some of that with my students that are looking for that, Norm. So awesome stuff. And then also there's some free strategy videos and everything in there. So just check that out, 12minutetrading.com/CFN. And you can kind of get into our world, learn a little bit more what we're all about, and check us out.
Perfect. Well, thanks a lot for you guys being here. As far as the option professor is concerned, we do have a PDF report on how to hedge against market declines and also upside surprises. And the PDF report has been very well received and has a lot of good information to it. So you go to option, professor.com, put your information, and we'll get you information on getting the PDF report. Okay. Hey guys, Norman, always good to talk to you, and Dave, very nice to meet you. So hope everybody had a good time here today, and check out what we've got to offer, and good luck and good trading the rest of the week, everybody.
Thanks, everyone.
Take care.
All right, thanks guys. Yeah, great. A lot of good info covered today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And then you can also go to TimingResearch.com, and this post will become the archive for today's show as soon as I can get it ready. Also, I just want to thank my guests again for today. Dave Lukas of 12minutetrading.com, first time guest, so thanks for being here. Also Norman Hallett of thedisciplinetrader.com, and the option professor of optionprofessor.com. Thanks everyone.
Thank you.